Thanks for checking out this week's FinPrep Trading and Investment video newsletter. So we'll begin again here with the year-to-date relative performance. These are percentage price changes. NASDAQ now on the top of the pile, which makes sense given that when we saw, remember at the beginning of last year, it was pulled into its 50-day moving average, whereas the other indices we track, S&P, Russell, etc., were not. So in that sense, it offered relative value, so to speak, in the context of the continued bullishness, relatively speaking, within stocks. NASDAQ had the furthest to run, and run it did. So top of the pile so far. A little bit of loss here stemming out of energies. Bonds continue to post additional gains, though marginally so. We'll look at some important levels there on the TLT, needless to say. Precious metals continue to hold their ground, as well as copper now getting a very nice showing and follow through, which we'll review with the JJC. Finally, with currencies, did see the confirmation out of the Japanese yen moving in tandem with precious metals as they have for the past few years here. So that was nice confirmation, and further weakness there out of the Great British Pound. Commodity currencies, Aussie dollar, Canadian dollar continue to hold up quite well. So that's what we're looking at here at the end of week 2. Flipping then to the chart. SPY 228 still functioning as resistance. We draw a trend line off last week's high of 5-day Friday, really kind of capping price in through here. So given how complacent at least VIX seems to be signaling, if we get a pullback, once again looking for 222 to hold at your 50-day moving average, as well as clearly your breakout here, end of last year, 7th of December, as well as the 220 level more or less off that 420 high trend line, still functioning as support to the last bounce even. So should we even pull in that far, that is where we think market may find support. Dow, DIA did lose that trend line it initially held as it failed to break above that 200 level. So similar story here. If trend line support, should we get a further down move, if we don't get a gap and go sort of beginning of week next week. Q's pulled in nicely to actually maybe 15 cents sell off through that 9 E.M.A. exponential moving average, but interesting to see once again that's not only low of week, low of day, and then into new highs here for Q's. Tranny is looking good, so beginning to round out there as you saw on the daily chart, and importantly, we were talking about important that this guy holds the 9, this is weekly exponential moving average. In this case, you see on the weekly chart this diagonal move off a very strong up move, basically bull flag on a weekly basis, with the potential bullish bounce lining up, although at high levels for the MACD, and then a nice hold of the zero line and a potential bullish crossover on the weekly or daily MACD, forgive me. So it looks like a pretty decent setup here out of the trannies. We'll see if we get some follow through if the sell-off doesn't ensue next week. All right, let's take a look at treasuries. TLT. So TLT had resistance at 123, which you'll notice basically starts, your first very minor reaction move off the vicious sell-off, which began on the break of the trend line there in November of last year. So nice kind of cup, almost you may want to call it cup and handle. More important is essentially it's holding this trend line currently. That's low of week, or low of day Friday for sure, holding above the 50-day moving average. So failing that, we still have the rising 20-day moving average in 118, approximately below that, should this not hold. But we'll look at munis here in a sec to see somewhat of it, that TLT, as we saw, is somewhat lagging, but playing ball, which is nice. Dollar is a little bit more of a mixed picture. Holding above your 50-day moving average currently. You still have your bearish crossover, your 9 E.M.A. through your 20 D.M.A., with your 20 now beginning to curve out and perhaps hook down. We'll see oversold and a potential negative crossover on the daily MACD. Again, the mixed signals here then being the weekly MACD, and perhaps more significant, particularly in a training environment. Looks like you may be setting up for a bounce. We'll see. But basically, you're pulling in a bit. So we'll keep an eye. Actually, we'll take a look at the Euro FXE chart. ETF to kind of get a better sense on which way that UUP is likely to hold, given that it's 60% weighting, as I recall from last looking. Gold, another good week, holding the 9 exponential moving average, closing above the 50-day moving average. So good starting, very good start to the beginning of the year here out of gold. We're only 2 weeks in. Positive crossover your zero line on your daily MACD, and still oversold even on your fast stochastic on your weekly basis, and a potential bullish crossover into net from nice kind of oversold or negative territory here. So we could still see a nice strong start to the year out of GLD. We'll see what happens. Silver, on the other hand, still showing strength, but closing on the SLB anyways, closing below the 50-day moving average. So typically, what we want to see if we look at 2016 anyways, looks like perhaps a few months in, you get this outperformance out of silver when things really start to go. Whereas this looks like it stretches back to about mid-2012, more or less an uptrend in the gold to silver ratio, i.e. gold outperforming silver, which was consistent with sort of a bear market theme. So looking for, well, clearly caught between two weekly moving averages here, your 50 to the top and your 200 on the bottom. So a break either way should help. A break to the downside in particular, outperformance on silver, in other words, would give further credence to the idea of another strong beginning of year move out of precious metals. So we're going to keep the gold to silver ratio in mind here as we move forward. GDXJ then as a more or less derivative of the gold price movement. So gold miner stocks very sensitive to the change in gold price, holding the 9 exponential moving average. And then your resistance in this level maps out pretty well with your 20-week moving average as well as your 50-week moving average. Looks like you have that bearish crossover, but price still pushing up, kind of giving it a nice little test there with the potential bullish crossover here on your weekly MACD, and you're still not even quite to neutral per se on your fast stochastic on a weekly basis. So we still may get some further strength again out of precious metals, which would be nice to see. Copper, fantastic. So we're again talking about the 50-day moving average, held it. He had a nice pop above the trend line, and then confirmation that so far it has held. So the downtrend off your 2011 peaks, clearly copper in a bull market, should we not double top out here in particular, would be nice to see. So good stuff, very good stuff out of copper. Munis, so similar to treasuries, remember we had this nice long-term trend line, multi-year, 4-touch, boom, and very nice 3-day, looks about 1 week move. First pull in, and then here we are on a second pull in, and then your breakout above 109 and a nice move. So looking for a corresponding trend out at TLT potentially, again, should those levels we discussed hold. But good move so far out of munis as sort of the leading light there, strangely on the sell-off, and then now the at least reaction. FXY, again, showing a nice movement out of the Japanese yen into overbought territory, but holding that very important sort of 82 to 80 level where we had based and consolidated for numerous months last year in particular. So good, again, confirmation on the precious metals rally so far. Euro holding the downtrend, similar then to TLT, although this is in a downward direction, hence downward price channel, stretching all the way back to 08. It looks like your 5th primary touch, so we're getting some good initial movement. It's not, you're not buying a whole lot, right? It's not this massive spike off the trend line. So we'll see how this bit plays out in future. Holding at your 9 weekly exponential moving average and your 50, and also your short-term resistance trend line, just connecting the peaks essentially off this sort of move off this trend line multi-year. So this, this leads us to believe that we could see further strength in dollar, but given that you are at short-term resistance both on your moving average and trend line basis, as well as overbought conditions, again, somewhat 50-50. FXB finally got that retest of the 118 level. Nice. And then the question here is, should we continue downwards, right? If you get your bearish crossover, your 20-day moving average to your 50 and your 9 EMA drifting downward. So should we get to the opportunity to retest 116 flash crash lows, will that hold? And if not, will we get probably not as pronounced a sell-off as Brexit, clearly, but something with a nice few gaps in it would be interesting to see. All right. And I think that, that basically covers it for this week. So thanks for listening.